What's good, y'all? This is your boy Jay DeVar, man, bringing y'all another upload. I know it's been a minute since I've uploaded the video, but basically, guys, I've just been trying to like dibble and dabble into the futures market and just get used to that. Um, so yeah, this is just gonna be like a quick little update of like what's been going on in my trading journey. Like I said earlier, I've been dabbling into the futures market. I'm still gonna trade forex, but I do kind of want to like venture into futures just in case like forex might be one of those things where like you know with all these regulations and everything coming down to like CFD firms with the US and everything. So just in case that I really do need to like venture into like a new type of like trading, you know, so I just been practicing on with demo trading with futures to get used to it, to get used to like the new things like contract sizes and everything. Also to like counting ticks and But other than that, y'all, that's really what's been going on in my trading journey so far right now. Also too with like the same, I've been using the same strategy also the past like 2 months. I made a couple of videos explaining like what it is and everything. Um, yeah, using like some of the ICT concepts that I've learned and that I've kind of like you know took those the ones that I like worked the best for me and kind of like made it like my own model. And also too looking at some of the videos that he posted years ago with certain models. So the model that I use is a short-term trading model, looking for weekly expansions. So looking for the high of the week or low of the week to form between Monday and Wednesday, and then based upon that, like look for my entry. But other than that, man, it's just been a journey. It's been a process. I've been enjoying learning, and I've been enjoying all the lessons that come along with it. And there's ups and downs and everything, but also to like battling like that psychology part also. But like I said, man, like this it's really been like a fun journey going into like venturing into something new. I've been learning how to trade forex for like the past 2 to 3 years, and now venturing into futures. I kind of see that like it's not really that different. It's just different as far as like like in forex you have pips, futures you have ticks and points. Forex you have lot sizes, futures you have contracts. So there's been some hoops and hurdles, but other than that, man, just gonna show you guys like a quick trade recap of what I did this week. But actually, before I do that, I'm actually gonna go ahead and like just run through you guys like my analysis on the US dollar really quick. So as you can see right here on the US dollar, we do have this buy side liquidity. So like these relatively equal highs resting right here. As you can also see in the current price action that we have, we're currently on the buy side of the curve of this previous move here earlier in the year. So around like April. These relative equal highs. I'm thinking that now is probably the time that we should see an expansion higher towards so running out this buy side liquidity. And also too, there's a monthly high resting right here from last year in September. So there's a monthly high resting right here. So I think now with us being on the buy side of the curve, also there's a fair value gap right here that's been tested, and price has finally respected this fair value gap. And we also have another fair value gap resting in here. This is on a daily time frame also, by the way. So we have this fair value gap, this daily fair value gap. Also to this swing, this price swing right here took out these highs right here, and it respected that fair value gap. So I'm inclined to believe that we should see higher prices, and that on the US dollar we can possibly run for this for these relative equal highs right here back in April, and then potentially run higher and run this monthly high right here based off of September and October, back in October, yeah, last year of 2023. So based off of that, my current idea on US 30 or NYM1 right here, this is the futures contract for US 30, or one of the futures contracts for US 30. currently, as we're sitting right now, we have a daily dealing range right here, and as you can see, we have a fair value gap right here. This internal range liquidity pool right here in the daily time frame. We also currently have an external range liquidity right here, based off of this current dealing range. And I took my fib last week. I took it off because like it was kind of like clouding my chart. But if I were to take my fib and just show you guys anyway, so for this high right here to then this low right here. Alright, I'm gonna change this really quick. Fib. So my current fib settings, so as you guys can see, we're currently at 50% of the range already. And to get to like the deeper premium levels of this dealing range right here, you see we have inside of this internal range liquidity, we have the 61.8 retracement and the 70.5 or 71% retracements. I know some people use the 71% or the 70.5. I use the 70.5, but yeah. So inside of this internal range liquidity pool right here, or this daily fair value gap right here, we have that 61.8% retracement level and that 71% retracement level. So when we do reach this level, I want to anticipate a reversal like somewhere in here, you know. But I don't necessarily need this, but I just like use it to see like, okay, if it does get here, okay, what are these levels looking like, and potentially when it does reach for this internal range liquidity, okay, what levels can we like spot, you know, like the reversals, right? So right here, that 61.8 and that 70.5 retracement levels, right? But I don't necessarily need it on the chart because honestly, at this point, you see, I already have like a lot of things on my chart, so like I don't want it to like, you know, kind of be in the way or clutter up the chart, you know. But I already have it in the back of my mind that like, okay, like up in here, this is the 68 and 70 and a half retracement levels. So I'm pretty good with that. But either way, I'm anticipating some type of reversal in this area right here inside of this internal range liquidity or this daily fair value gap. Matter of fact, I could also show you guys too, like my premium and discount levels that I use on that other fib. I'm gonna change it really quick. I'm gonna change this to premium and discount fib. As you guys can see right here, from the high to the low, right? We have the premium of the range, this dealing range right here, and then we have the discount of this dealing range right here. And currently, we're already moving our way out of discount and back up into the premium of the dealing range. And this area right in this internal range liquidity on the daily time frame is resting right inside of this the premium of this range right here. So that's why that's kind of like another confluence of like, okay, we get here, you know, I want to wait and look for a reversal pattern, and then my next target would be any lows, and then heading down into the external range liquidity on the daily time frame of this premium range. So taking out the low of this current dealing range that we're resting in on the US 30. Here we have the NASDAQ in Q1 futures contract. Currently on NAS, we're still running. NAS is currently at all-time highs right now. US 30 is the only one that did not make a new all-time high. Right, so you can see right here we had that S&T. I had the S&T up here earlier, but I deleted it to kind of like, you know, make space. But yeah, that's currently where we are with that. That's my current trade idea on US 30. So I'm gonna delete this really quick, and then I'm gonna show y'all like basically what my kind of idea is going into next week. I actually show y'all like my previous this past week's trader setup that I also took. So right here you guys can see from a couple Fridays ago, so June 7th, right? This was Friday's low, and then right here this was going into this week right here. So you guys can see the 692 Sunday open. I have that marked right here. So at this candle right here, this was the opening of this week, this past Sunday, this week the 9th, and all the way to the 15th. This is our current price action right here. This is where the market closed on the 14th of Friday. Right here, the market closed right here. It's currently Saturday. That's when I'm doing my analysis. So as you guys can see, let me also do this right here. Right, do this right here. Clean this up a little bit. All right. Tuesday. Boom. There we go. All right. So right here. So the reason why I was wanting to see higher prices in US 30 this week was because you see right here we have Friday's low from a couple weeks ago, so the 7th, and then what I wanted to see was like an S&T or smart money technique reversal, because I was already anticipating NQ to see higher highs anyway, especially because it broke his previous all-time high, and so that's exactly what happened right here. So on Tuesday of this week, the 11th, we created the S&T with last Friday's high. Last Friday's low. We created the S&T, we ran it, and then we reversed. And on here on the NQ, you see we had Friday's low from the 7th. So the same low from US 30 and the same low on Friday, right? But instead what happened was on Tuesday, NASDAQ didn't head lower than last Friday's low, right? It actually closed above last Friday's low and created a higher high. So these two assets right here, they should be moving in correlation with one another. So if US 30 makes a lower low, NASDAQ should make a higher low. But when this doesn't happen, this is when we have our S&T or our smart money technique. So that's another confluence that I use. So that's another confluence that gave me the idea that, like, okay, right, so we should see right here, we should have a reversal right here. And then, so my target is up into this internal range liquidity on the daily time frame. My entry is on the 1 hour time frame. And as you can see right here, a little after Tuesday, like Tuesday after hours, I entered in my position right here, and my stop was right here at this low for like a 1 to 2 at least, and my target was up into the daily internal range liquidity. That's right here. So this large gap right here, because this week we also had FOMC, we had the Fed fund rate interest rate like announcement, or the federal funds rate announcement. We had that. So that's why you see like this large gap right here at this at the 2 o'clock, between the 2 o'clock and the closing hours for the futures market, and then the opening back up. So it closes at, I want to say, like 5 o'clock, and then opens back up at 6, and then we just had like this large opening gap right here, right? So throughout the week, my trade management was I'm already anticipating there to be higher prices, especially given the fact that we already did expand higher past Sunday's opening price. So we got in below Sunday's opening price, and that's also part of my strategy. So in this current scenario, if I'm longing, I want to see like a reversal below Sunday's opening price, and we got that right here with the S&T on the with the US 30 and NAS. So we got that with the S&T reversal confirmation, and also to an order block confirmation. That's also kind of like my entry too. I can go ahead and kind of like mark that out for y'all. We kind of like had a order block entry inside of here. So as soon as we get that close above, as soon as like this bullish candle closes above this bearish candle right here, my bearish candles are black, that's where we have that, let's see, that order block right there. All right, so I got in right there at the order block. That's the change in state of delivery, right? And my target was up here into the internal range liquidity. Now back to the trade management. Following into that, on Wednesday was my entry, and Wednesday was also the same day of the rate announcements. So I was already anticipating this to be like a pretty volatile week anyway, right? So that's why I was cool with like, okay, you know, if I see any type of retracement on Wednesday, that's fine, you know. Because I mean, I had my stop in for a reason. You see, we didn't get stopped out on Wednesday, and this gap we opened up higher. And on Thursday, I was anticipating on Thursday that it was gonna like come back down and fill in this large gap, this large market gap right here. So on Thursday, I was like fine with any type of retracements. Once I saw a retracement on Sunday, I actually thought about closing it because that's also part of my strategy too. Is like anytime like after Wednesday, if we're gonna run higher prices and tap into a level, we shouldn't see any type of retracement back into Sunday's opening price, because at that point on Thursdays are also kind of like the reversal days that ICT talks about. He says to be careful on Thursdays because Thursdays it may form an intra-week reversal. And then on Friday, as you guys can see, on Friday we actually ran lower and then went back into some of the opening range on Friday. And honestly, at that point, I want to say I closed my trade like about right here before the market closed. Because at that point I was just like, you know what, we're just gonna be ranging. Because I was at work at the time also, so I was just like, you know what, this is probably gonna be a day where it's ranging because like all of the important or the volatile news events have already like run their course. And so basically at that point I was just like, you know what, I'm just going to close it. I'm already, you know, it was a demo trade, and then, like I said, I'm practicing on demo to get used to what it's like trading futures, and getting used to like doing my own position sizing. But other than that, I just went ahead and closed the trade. I want to say we closed with like about $800 something in demo. If I can pull it up. Okay, there we go. If I can pull it up, account history. Okay, so we closed the trade with like about $600. Yeah, so yeah, see it says close that long. That was this trade right here that I got in on Tuesday, late Tuesday. So I closed it right about in here somewhere, and we netted about $600. My initial profit target was about $2,000, but hey, 600 out of 2,000, you know, it is what it is. We closed in the money, you know. And so basically what I'm trying to do is like also to like build like those good habits of like in demo, and then transition those habits into live. When I do like go for a combine account, I'm thinking about going for Top Step with the funding and everything. But yeah, so that was last week's current idea. This week's current idea, I'm still, you know, I'm still kind of sold on this level being hit right here, especially because you guys saw it earlier on the DXY. I'm thinking we can run for that buy side liquidity, those relative equal highs that was there, and that monthly high that was back in like September, October in 2023. So I'm thinking that if the dollar can run for those for like those levels higher for those levels, I'm thinking that when US30 does eventually reach up into this internal range, fair value, this internal range right here of the dealing range on the daily time frame, I am anticipating that I see like some type of reversal, and also too a reversal on NAS, right? Also, because NAS is also like currently at all-time highs, so I want to see like probably like a reversal also confirmed on NAS, and see like a type of like S&T divergence up in here. But currently right now as it stands, I'm gonna show you guys like what my current trade idea is. Not focused on NAS right now. I'm gonna go ahead and make this a singular chart. So with US30, currently my trade idea is, because I'm still anticipating this internal range liquidity on the daily time frame to be tapped into. So this is still my target. So currently right now, I'm gonna go ahead and mark what last week's closing price right here, because this is potentially gonna be Sunday's open. So I'm gonna go ahead and mark it Sunday's open. So tomorrow's the 16th, so 6/16/24, Sunday open. And this is just for right now. Like when the market actually opens Sunday tomorrow, that's when I'll go ahead. If I need to move it, I'll move it, right? But just currently right now, this is where it's at. This is the level. So if I want to be long, I want to kind of like long underneath here, right? I kind of want to look to enter underneath here, because also too on Monday and Tuesday it could just go ahead and rally and head higher and tap into the level, and I might not get an entry, right? And so then by that point, I'm waiting to see like a reversal confirmation between like Tuesday and Wednesday. But other than that, my current trade idea is, you see right here, we have Friday's low. Last Friday, this past Friday is low. All right, so yesterday's low is currently sitting right here. Oh, what am I doing? Yep, so it's currently sitting right here. Right, so I'm going to anticipate on Sunday's opening price and between Mondays, so like Monday's range, kind of like ranging underneath here, and then forming an S&T with this past Friday's low right here. So I'm not sure what Monday's range is going to look like, but I am anticipating it to like form like some type of like S&T. That's what I'm going to look for, right? And then potentially long up back into this internal range target right here. So it's not really much else to do but just wait until the market opens, and yeah. Yeah, man, that's pretty much it, man. Like I said, this has been a journey. This has been a whole process, and I've really been enjoying like all of the ups and downs, the learning, the journaling, and everything, and kind of like getting my psychology together and getting my trade management better. I think that's one thing that not a lot of people to really talk about. Like a lot of things focus on entries and strategies, and then but not really like trade management. When you do click the button and you're like in the position, now it's a battle of like, that's another battle in itself. Now it's just like, okay, I'm in the trade. Now how do I not lose the trade, or how do I come out of it with something, and sometimes you got to make decisions. And with my strategy that I learned from ICT, his short-term trading strategy, like that rule I mentioned earlier, like anytime you see like after Wednesday, we should not see a retracement back to Sunday's opening price. If it's gonna head lower, we should see it head lower after Wednesday. After Wednesday, if it retraces back up into the Sunday opening price, it might be an intra-week reversal, right? So at that point, you exit the trade. If it's in profit, it's in if it's in profit. If it's in profit, it's in profit. If it's not in profit, just take the loss. And just preserve whatever capital you have. That's kind of that's really the habit that I'm really working on building up, because I will be stubborn and just let it hit my stop loss, and I'll just be like, if I'm wrong, I'm wrong, But, it's one of those rules built in to kind of like protect you, especially like if you are risking like a lot of capital on one position, you could just close the position out and then just look to re-enter the next week, But with that being said, that's all I got for this video, y'all. If you stayed this long to watch, I appreciate it. I'm trying to get better at like teaching and like explaining everything, but that just gets better with time. But if you guys did stay this long, I appreciate it. Ask you guys, please subscribe to the video, subscribe to the channel, like the video, and leave a comment down below if you want to leave any feedback or anything like that, or just make conversation. But this is Jay Davari, and I'll see y'all in the next one, man. Peace out.